Distinguished board of directors and managers, today we're going to present on the valuation of Sun Microsystem. We're the corporate development team, and we have been following this case for months. And today is our time to present you our final results. There are two major reasons we want to acquire Sun Microsystem. First of all, this company is a hardware company in the tech sector, which has a high synergy with our company to further expand in the whole industry and increase our market share. And the second reason is that ever since the rise of Apple, the whole tech sector has been fundamentally changed. In the past, each tech company occupies a very specific niche, which encounter very little competitions. But now large companies span across the hardware and software and the other sectors as well. So it is a high time for us to seriously consider acquiring some ecosystems to further expand our business.
On Friday, April 17th, 2009, we made an offer to acquire Sun Microsystem for $7.38 billion or $9.50 per share. However, the journal was not complete yet. We, as the member of Oral's corporation development team, expect IBM will counter our offer. IBM is one of the potential candidates for Sun Microsystems. Have we considered every possibilities? Is the final offer sufficient? How much more will us offer if rivals increase their bids? These are the main things we need to consider. Therefore, our team will do the estimation again. Our project will first conduct CDF evaluation, then followed by sensitivity analysis and multiple analysis to reach a conclusion and recommendation. According to our CEO, Larry Ellison, Sun Microsystem is a good fit for Oracle for a lot of reasons. The most important one is to realize the vision of being the Apple of the business technology sector by providing both hardware and software components.
So, to determine how much Oracle would be willing to pay, we first created discounted cash flow models to determine the worth of Sun's shares, both with and without synergies. Here is the pro forma income statement and some assumptions. We use WACC to represent the cost of capital, weighting RD and RE by book value of debt and market value of equity. Cost of debt equals BB plus corporate bond yields, which is Sun's bond rating. And we computed the cost of equity by CAPM, taking 10-year treasury yield as risk-free rate, and we assume 5% market premium. Therefore, we got a WACC of 10.67%. And we also assume the terminal growth rate equals risk-free rate. So the share price we compute under standalone situation is 11.96. However, with synergies, we calculated that the integration charges would be close to 1.1 billion in aggregate, with about 750 million incurred in 2010. And we should also consider an initial loss in operating income of about 45 million due to loss of customers or delayed purchases. And on the other hand, cost cutting, licensing income, new products had the potential to boost operating profit by as much as 900 million per year. But prefer to remain conservative, we assume that such synergies will kick in gradually over a 3-year time horizon starting in 2011. So after all these adjustments, the share price with synergies would be 18.66.
We also did sensitivity analysis to figure out how growth rate and WACC influence stock price. With increasing growth rate and decreasing WACC, the stock price will gradually increase. And when the growth rate is about 3.2%, the stock price of 9.5 occurs when the WACC is around 12.5%. Moreover, we also compare the standalone stock price with stock price and the synergy effect. Under our assumption and valuation, the synergy effect pushed up the Sun stock price for about $7, which shows a relative high offer spread for us.
So we also do the comparable valuation methods, which is a complement and also a validation for our DCF models. There are three things we should keep in mind before starting it. The first one is the Sun Microsystem is now a purely hardware company. It has about 50% of business in hardware and the other 50% in software. The second one is the Sun Microsystem has a negative EBIT and EBITDA in 2019, but it has very good. But it has a very good standing in the EBIT and EBITDA in 2007 and 2009. And the third one is there are a list of comparable companies such as Apple, IBM, Microsoft, and so on for us to do a more accurate evaluation in the end. So as mentioned above, there are several companies and we separate it into two parts, primarily hardware and the other one is software. And then we come up with the medium of the multiples of EV over EBIT and EV over EBITDA, which are the 9 and 7 for the hardware sector and 12 and 9 for the software sector. And then we synergize all those outcomes with the enterprise value with the EBIT and EBITDA of Sun Microsystem in 2007 and 2008 in average, and then discounted with the present value in 2009. Then we come up with the share price of Sun Microsystem, which is 7.45 for the EV over EBIT and 11.8 for EV over EBITDA. So we're gonna adopt the latter one, which is 11.8, which not only because it is is closer to our DCF model results, but also because the tech companies have more accurate EBITDA. They have a very high value of depreciation and amortization. So the final price we're going to offer from this method is 11.8 per share.
Through the valuation and analysis mentioned above, we can conclude that we are able to purchase Sun Micro, this company, because of the synergy strategy and the bid price. So in the discount cash flow valuation, we use the 10.67 WACC rate to value the bid price. And in the sensitive analysis, the synergy effect can push up the stock price for about almost $7. In the multiple analysis, we can get the validation of the scope of the resulting valuation. Since the original acquisition price is $9.5 per share, and if we can use the synergy strategy, we can push up the price to the $18.66. Even without this strategy, we can also get the $11.96 per share. So we believe that we are able to compete with other competitors if they also want to build this company. If you guys have any questions, you can contact the faculty with the following email address and the cell phone numbers. Thank you guys for the listening.